All right, guys, back to work. I know break time is over. I missed you guys last week. Boy, markets are, you could definitely tell it's the end of the summertime season. Last week of the month of August right now, because markets are choppy, they are sloppy. But I'll tell you, look closely at these charts right now, and you're going to see some beautiful sideways, balanced, range-bound markets. I love ranges. I think once you know how ranges work, they're one of the easiest types of markets to make money with. So don't let this choppy price action fool you. I have a number of trades I'm watching for tomorrow. Lots of traps on both sides of these ranges right now. By the time we're done this video tonight, though, you'll have an easy roadmap to make some money tomorrow as well. Before we dive in, though, to my favorite trades for Tuesday, a lot of good trades we're watching for tomorrow. Before we dive into that, though, make sure you subscribe to our channel. You don't want to miss tomorrow night's video, so make sure you subscribe first. And as always, if you guys enjoy these videos, if you like these lessons, hit that like button, will ya? And as always, give me a shout out, give me a heck yeah in the comment section below. Thank you guys so much for tuning in, supporting our channel. Enough of the intro though, Joe. Let's go make some money on Tuesday. I have 3 very important clues right now on these charts that are telling me where the best winning trades are setting up for tomorrow. One of those clues is right here on these hourly charts, these 60-minute time frames. We are bullish overall on the S&P and SPY. We're bullish overall on the Nasdaq and the triple Qs. One very important clue, I like to use these hourly charts, these 60-minute time frames, to give us the best overall directional bias. This tells us where the odds are stacked in our favor. But there's one thing it doesn't tell me. This is good for direction, but this does not help me time the best entries. We know buyers are in control overall, but I have 2 even more important clues on some faster time frames, some tick charts that will help us tell the best entry locations, how to time the best entry. So we'll talk about that in just a moment. Before we do that though, let's check schedule for tomorrow, because tomorrow and this week ahead of us is kind of an odd week, right? The last week of the month, I have 4 things on my radar this week, and I want you to keep them on your radar as well. First things first, the end of the month, the end of the summertime season, we do expect uptick in volatility. Whenever we see the end of the month, we always know volatility will increase here next couple days, so expect the volatility to keep cranking higher. Second thing is tomorrow's news. Consumer sentiment, 10 o'clock Eastern time. That is definitely the big news of the day tomorrow, so keep that on your radar. Third thing on my radar for this week, we get that NVIDIA earnings report coming out on Wednesday after close. We'll talk a lot more about that, of course, as we go deeper into the week this week, but that's something on our radar later on in the week this week. And speaking of later on in the week this week, I will only be publishing videos this week on Monday and Tuesday night. There'll be no video newsletter on Wednesday and Thursday evening. It's a holiday week, and I'll be out of the office in the afternoons the rest of the week on Wednesday, Thursday, and of course Friday as we finish up what has been a fantastic summertime season. So again, only tonight and tomorrow night for the newsletter videos. I will keep posting short videos and stuff on Twitter throughout the day, each day. But be aware of that consumer sentiment number tomorrow morning at 10 o'clock. NVIDIA on Wednesday night after the close. And again, uptick in volatility. Expect volatility to kick up a few more notches as we go deeper into the week here this week. Now, back to our charts though, because it's good to know we have that big number tomorrow morning at 10 o'clock Eastern time. The money is made on the charts though. It's good to know when the news is, but let's focus on the charts right now, because the charts are telling us where the best trades are for tomorrow. I talked about 3 important clues here in the introduction. One of those clues is this bullish overall directional bias. That's great to tell us what the long-term momentum direction is, but it's not going to help us find the right entries and exits for tomorrow. Let's now go to some tick charts. Tick charts, this is a 7,000 tick chart. All the time frames, by the way, in the upper left-hand corner. And if you're watching for the first time right now, welcome to the YouTube channel. That yellow line right there is the 21 EMA. It is pretty much the only indicator you need to find lots of winning trades each week in our trade room. 2 more important clues on this chart. One of those important clues, a strong move going higher. Now, why is that a big clue? Well, because whenever we see a strong move in one direction, we expect a 2-legged pullback and a retest, in this case, of that high. Now, what happened to the high? They were rejected. In our video courses, we talk a lot about rejection or acceptance. The buyers were rejected at that higher price. Usually, when we see rejection off those highs like this, usually acceptance now is somewhere down around the lowest part of that pullback. I would imagine right now, because of that rejection overhead, I would imagine a lot of buyers are waiting down below that 5603 area. This whole area down here is a very, very attractive now because of that rejection overhead. Second big clue here, and one of the most important clues you'll notice is a trading range. More specifically is an expanding triangle. I mentioned earlier how much I love range bound markets. We have a triangle that is rotating back and forth. Now, ranges act like magnets and they love to rotate up, down, back and forth we go. So this triangle tells us, boy, this area down here looks very attractive. We're overall bullish on the higher time frame. Got to be careful up top here. We'll talk about some shorts off the top up there, but I'll tell you, as you can see here, very, very attractive area now underneath this 03 area. What I would love to do is I would love to get some bear traps down here, right? Overall bullish on the 60-minute time frame. I would love to take this thing lower. And of course, you know me, right? I'm not going to pick a bottom on this. I have no crystal ball, right? I'm not going to pick a bottom and blindly buy down here. When this thing pulls back to that moving average, because I don't know how far the move down will go, what I do know though is once this thing pulls back to the moving average, this is a horrible place to be a seller. Great spot to be a buyer, but that's a lot of momentum going lower. What I'll do is I'm going to let the rookies come in and chase this lower. And what I want is I want to use what I call a failure pattern, like I teach in the free video courses. Let the bears try once, let the bears try twice. What that will do is now I know where your stops are. If you're caught short down there around support levels underneath a range magnet in an overall bull market, the 60-minute time frame, again, horrible spot to be selling, but if I can trap in those rookies, I can run their stops and make them buy their way out, right? Short squeeze those stop losses. What I always look for in these situations is something like this, a failure into what we call a trap combination. Now, what's a trap combination? It's a bear trap pattern. It's a higher high in price and a move right below a prior swing. We see one right over here, right? We run lower. The bears try a couple times. They squeeze up and they get in with a trap right there, right? So failure in a trap pattern, failure into trap pattern. Again, just like I teach this stuff inside the free video course. And remember, where does the market want to go? The market wants to rotate, right? It wants to rotate now back to the other side of that trading range. So that will be where our targets are on a trade like that. Now, be aware, a couple variations of that sequence. For example, I want to run lower. I want to trap some bears in down here, right? And squeeze their stops and go back higher again. There are two types of variations of this that you want to kind of keep in mind. One variation is sometimes it bounces so hard off that low that we wind up getting those two tries up here. I don't want to buy way up here because now my risk is here. My reward is there. It's not a very good risk reward ratio. So if we bounce hard off that low, what I'll do is I'm going to look for that same two tries, but I want to incorporate now basically a bear trap pattern into those two tries. It makes sense, right? Because now my risk is here, my reward is right here. See how that little small adjustment right there, a failure pattern, I'm going to buy right above that high right there and basically buying into stops, right, as the bears get trapped in. But again, if this thing was to bounce back up hard, I'm not going to use that same pattern now because now buying up here, you're buying too high. I want to buy down here, right? Buy a bear trap entry right below that low. That way my risk reward ratio is more attractive. Another variation of it is a V bottom. See, sometimes there's so many buyers down here, it V bottoms like this. And what happens is it begins to grind going higher. And when you see a V bottom like this that grinds up like this, the hardest part about this is not chasing after it. You want to stay patient and wait for a pullback. Here's how I do it. I mark a trend line off the highs like this. I bring it trend line down around that low to make a channel. Then what I do is I look left, I find a prior swing. Ideally, it's that first little tiny pullback as it grinds higher. and that is usually where bear traps are hanging out. We oftentimes will get below the 21 EMA, trap patterns or failure patterns below that 21 EMA. Failures, of course, lead to pullbacks into strength move. We call this the price action cycle in the free video course. So trap pattern, failure pattern, pullback combination, right? Strength move going higher. The bottom line is if it V bottoms off that low, don't chase after it. Get the first test, right? First test is the best test to buy that first test off that channel. And this could be any of the entry patterns you guys are learning in our free video course, which reminds me, I know that most of you guys and gals, you know these patterns already. You're making money with traps and failures and pullback combinations. But I'll tell you, if you're here for the first time right now, this might be a brand new language for you. What the heck are these patterns? A brand new strategy for you. Don't you worry though. I teach this entire strategy. I have hundreds of examples of failures, traps, and a whole lot more. I cover the entire thing in a lot more detail in our free video courses. What I'll do is I'll put a link up top here for you. Upper right-hand corner, grab that link that popped up right there and take that free video course, because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the best winning trades are waiting for us each day. More importantly, I want to help you start making money on your own. I'll teach you 4 my favorite entry patterns. You'll learn traps, failures, the whole roadmap is covered. Guys, if you're not making consistent money right now, if you're missing the best trades today, if you've lost all your confidence in your trading, hit that link that popped up there, take that free course, learn the roadmap, learn the better strategy. It is perfect for anyone who is serious about making money in these markets. Oh, and also too, don't forget too, I'm gonna put all the important links tonight, the description of the YouTube video. I'll put the free class links down there. Definitely start there first with the free class, learn the basic roadmap, start making money on your own. But also too, we trade together every day in our trade room. I'll put trade room membership links down there for you. Check that out. Come trade with us every morning. And don't forget too, I post a lot of updates on Twitter or X throughout the day, videos, charts, mindset stuff. If you're on Twitter X, give me a follow. Again, all the important links, you'll need the details, description of that YouTube video. But now you know, right? Now you know why I love this area down here now, right? I would love to get this thing to roll lower, trap some bears in with failures, grab those bear trap patterns, right, as they try to rotate back and forth. Now, one more thing. We oftentimes see a strong run down. We oftentimes will get a failure pattern down here. We'll get a winning trade out of this. But for whatever reason, the market will hold kind of a prior level of support as resistance and run back down to do it again. Remember, a double bottom or a retest of a low like this in an overall bull market we saw earlier on the 60, this is not a reversal. This is a gift for the buyers. Again, this will usually be a winning trade. We'll get that one-to-one target. We'll move that stop up to our point of entry. We'll get knocked out though at the point of entry as they go back and retest the low. Now think about this for me here. Anyone who sells up here, where's their profit target? Probably back down to retest the low. So the way I look at it is anyone who sells here, they become buyers at that low. They're buying their way out of that short position. Is this a good place to sell? No, right? Not with a range level down here, not with a big range above us in an overall bear market. This is the last place you want to sell. But again, I'm not going to pick the bottom on this, right? I'm not going to blindly buy down here. What I'll do is I'll use that same failure into bear trap combination. So bears once, bears twice. Why twice? Because I want their stops. I want to juice those stops and squeeze that sucker back higher again. Again, once I get that failure pattern, take that, right? Take that one-to-one first target. You'll learn more about that inside the free video series I mentioned earlier. And again, as it runs higher, look for that. My favorite add-on is always going to be a bear trap add-on, right? It's adding more to it now as the trade works in our favor. Remember, the easiest way to make more money in trading is to add to your winners. If you understand how ranges work And you know they like to rotate back and forth like this. As it rotates back to that high, this is where those bear trap patterns we teach in the free video course will come in perfect handy there, right? To buy it as it keeps rolling higher there. Perfect. I love the way that game plan is looking there. Now, I want to grab the Nasdaq in a moment because the Nasdaq is a little bit different than the S&P. But let's talk about as we go higher here right now. Because if we go higher here right now, I really got to be careful as it goes higher. What I could do is I could wait for a nice strong breakout and then buy a two-legged pullback. This trading range, right? This trading range is a magnet, right? So once it breaks out, we can then use a two-legged pullback, right? Basically a breakout pullback, and buy a breakout pullback on this. I don't want to be buying though as we go higher, right? It's very difficult to make money trading or trading bullish breakouts in a bull market like this. Again, if it really rips and runs higher, then what I'll do is I'll wait for what I call a two-legged pullback, and that is basically a measured move that goes a bit too far. Think about a measured move here, one leg, two leg, a measured move that goes a bit too far. That will give me the general area for a breakout pullback. And then what I'll do is I'll use one of those failure into bear trap combinations, right? So bears once, bears twice, failure into that bear trap. Remember bear traps, higher high in price, move right below that low, right? Failure into bear trap combination. So again, if I can see this thing really push and give us some real strong momentum, again, we'll have to wait and see how that plays out for tomorrow. Then what I can do is once I see evidence now, again, we didn't get the acceptance, we didn't get that run earlier on in the session this morning. If I can see them make that move higher though, okay, now we know the breakout pullback is in play. Okay, breakout pullbacks are very common in range marks, especially when the breakout goes along with the overall trend on the 60-minute time frame. But again, we're not gonna pick the bottom, right? It's a two-legged pullback, right? So think about a measured move that goes a bit too far, right? Don't pick the bottom on that one. Find that failure, right? Find that bear trap and keep it rolling and keep it rolling from there. One cool thing about breakout pullbacks is the size of the breakout leg. The size of the breakout leg is the measuring leg. Take that pin right here, and that will give you an idea of where that final target will be. Another easy way to make more money is to get better at holding on to your winners, right? Not simply cutting your winners too early. So think about that for a breakout pullback up there, right? Breakout pullback. Now here's a question. How would I sell this thing back down again? Could I sell this thing back down again? Well, it's an overall bull market. So whatever I do, it has to be a really good setup. Well, there are two of them. Two ways to short this thing I can think of off the top of my head. Let's cover that next in the NASDAQ though. NASDAQ's getting lonely over here, and the NASDAQ really is a better example for a short off the high right now. On the 60-minute time frame of the NASDAQ, it's very easy to see right now. We're obviously bullish overall. You don't need me to tell you that big move up we saw here in the month of August. The direction is the easy part, right? The hard part is finding the entries and timing the entries properly. There's one very big clue, I guess you would say two very big clues here on this chart in front of us. The first one is this range right here, right? That range, you'll notice, is rotating back and forth, and surprise, surprise, there is a triangle, right? There's that triangle. Look at that beautiful triangle rotation. And we're sitting right here now at the low of that triangle, trying to rotate back to the top of that trading range, right? That's the overall goal. The big clue though is this new trading range. Recency is a very big part of trading. Whatever is the most recent range becomes the new magnet. So bear move down into a trading range now. Now remember, ranges want to rotate. They want to go down, up, down, up. They want to rotate roughly about the amount below, the amount above, right? And vice versa. They love to use these triangles back and forth. We talk a lot about this inside the free video series, right? So this shouldn't be something new unless you're here, right, for the first time. And if you are here for the first time, make sure you grab that free course link I dropped in the description of this YouTube video, or hit the little icon up top there in the upper right-hand corner. So this is one of my favorite types of situations because that range is a magnet. So if I wind up going lower here right now, I would love to trap in some rookie sellers because, again, we're not a bear market overall. What I'd love to do is get a bear trap down here and go back up into that trading range. I call these slingshot reversals. Whenever I have a bull market overall, but a bear range on the faster time frame, oftentimes this thing will run lower, right? It'll jam up those bears down here, bear trap down here, and slingshot off of that low, which will wind up creating the rest of this large range rotation up overhead. Now, again, same basic idea as we had before on the S&P. When I run lower, I'm not going to pick the bottom on this. I'm going to keep looking for that one try, two try. Keep looking for those bears to get trapped in so I can squeeze those stops higher with a failure pattern. Remember, failures, my favorite add-on to it is a bear trap pattern, right? So failure into trap combination. Again, you want to learn those traps, right? The higher high in price, and it can move right below that prior swing. And remember, the amount we go below the range can now be projected now above that trading range. Now we know where to leave a big target for us on the other side of that trading range. And remember those two variations I mentioned earlier on the S&P as well, right? If we run lower and we get, again, I want to go 1, 2, buy back up because now my risk reward ratio is great, right? But if it kind of bounces hard off that low and starts going like this now, yeah, see, that's not the place to buy. I don't want to buy up here. And it's not a very easy way to make money. If it bounces hard off that low, what I'll do is I'll flip this failure pattern into a trap pattern because, again, now my risk reward ratio now looks a whole lot better. So a slight variation of that. And again, we'll cover more of this in the trade room tomorrow morning as always. And again, right, if it rolls lower and V bottoms off that low, begins to grind going higher, we know what this market wants to do. It wants to rotate back to the other side of that trading range, mark that trend off the highs, bring it down off that low. Remember, look left, find one of these prior swings. Swings are where traps live, right? Get below the 21 EMA. That's where failure patterns live. Failures, of course, turn into pullback combinations. Again, this will make a lot more sense once you guys are digging through that free video course I mentioned earlier. So failures, traps, failures, pullback combos, strength trades as you go. Leave those runners for those range rotations. And again, that same thing, right? Go down. If they do, pop it up and do it again. That double bottom, those double bottoms in an overall bull market are fantastic ways to add in again. Again, it's 1, 2, failure into trap combination, like always, right, in these areas. So pretty much the same exact game that we mentioned earlier on the S&P, right? Just in this case, it's a bear move down into a trading range. The hard part now is that the price goes higher. Because the price goes higher here, I've really got to be careful with this kind of trend line coming down overhead. It looks like there could be a bit of a hidden channel, right, coming down there overhead. I love the idea of a breakout pullback here on this S&P. But it's just, sorry, on the Nasdaq, excuse me, like we mentioned earlier on the S&P, but not the same situation on the Nasdaq. On the Nasdaq, I really do want to get underneath that low and buy it back up. That way, both of these ranges will drag that winner back up into that range for us. If I go higher here, very difficult to justify being a buyer as you go higher here. What I'd rather do is wait for one of these two types of bull trap patterns. One is a straight up bull trap, right? It's basically buyers try once, buyers try twice. It's a lower low in price. Why lower low? Because buyers buy as price goes lower. I want to rope those buyers in with those lower lows. That tells me now their stops are right below me. Most important thing though is this is an overall bull market. I can't be as aggressive on short side trades as I would be in the long side trades. So because of that, it's not going to be a failure pattern short. It's going to be a bull trap pattern short. It's a more cautious way to short this thing because again, we're not a bear market. It's a bull market. This could be a failure pattern, right? It could be a simple 1, 2 and sell as it goes lower. I can't take that trade though when I'm going against the overall direction on the 60-minute time frame. So stay patient for that bull trap off the high, strong red candle, closing below that 21 EMA. Same rules I teach in the free video course. Now, a lot of times what happens is we get a V top up here. Right, it'll pop up, but this range below us is too much of a magnet. That trend line becomes a channel overhead here. The buyers get whacked and it runs right back down again. Oftentimes these will turn into those V tops, right? So it pops up, it gets whacked back down again, and it begins to grind going lower. These are easier trades, to be honest with you, because these now momentum now is turned over for the bears. The hard part about this is not chasing it as it goes lower, because we know now that range is going to want to rotate roughly about the amount below that trading range. I would love to buy down there too, right? Buy that sucker off of that low once we get there, right? So bottom line though is we don't want to chase after it. Mark that low. Find that new channel, and remember, look left, find some prior swings. I don't care what entry pattern I use up here. It could be a bull trap, could be a buyer failure. I just want that first test, the first touch off the high, followed by a bull trap or a buyer failure or a pullback combo. Any of the entry patterns you guys are learning inside that free video course. So be very careful if this thing runs higher. Again, on the S&P is in a lot better position right now for a breakout pullback. They got to prove it to us, obviously, but they're in a lot better position than NASDAQ is. The NASDAQ has this new trading range down here, which makes it very easy to justify a bull trap above that high, and then definitely some bear traps down here, right? Definitely getting lower here, trapping bears in. Remember, though, I can be a lot more aggressive at buying support levels below a range because we're overall bullish than I can be selling a reversal off the high of that range. Hope that makes sense. Hopefully that gives you guys a good game plan to follow tomorrow. Now, speaking of tomorrow, don't forget 8 o'clock Eastern time. I can't think of any better way to learn this stuff and start making consistent money. Come out and do it with me. Trade with us every morning, 8 o'clock Eastern time in our trade room. The easiest way to start making money is every morning in the morning room. I'm going to put all the important links in the description of the YouTube video. Again, if you're here for the first time right now, start first with the free video classes. Learn the roadmap. Start making money on your own. Everyone loves the free video series, so grab that first. Right, guys, that is all here for tonight. A short week here on the YouTube channel this week. That's right, though. We get some good trades setting up for tomorrow. Hope you learned a bunch to end the video tonight. Hope you use this knowledge to earn a bunch tomorrow as well. And hopefully I'll see you tomorrow night, same time, same place. We'll do it there, same time, same place tomorrow. In the meantime, be well, be nice to the out there, and be here next time. Adios, amigos. Bye for now.